Data is king. Throw aside all of those cryptocurrencies, Bitcoin, Ethereum, Matic. Data is the ultimate currency. It can help us make better informed decisions that can bring us more of those other currencies. I'm Sasha with Arcanum Ventures. In our firm, we use data and information to inform nearly every decision. Understanding a strong investment opportunity, figuring out the direction markets are moving in, measuring the effectiveness of a marketing campaign, and everything in between. In this new video series, I'm going to speak with you about data, and more specifically, blockchain data, and how you can use it like no one else is. We'll cover topics like distribution and decentralization of a token supply, financial management of startup companies, and ultimately, how we can use on-chain data for designing tokenomics and sustainable token economies. Today, we'll take a quick look at a startup company and use on-chain data for arguably one of the most important use cases, storytelling. Our goal is to look at on-chain data to paint a picture of a token launch and see how it lines up with the company's fundamentals. Hopefully, at the end, you'll have an idea of how to use data in a way that most data analysts don't, understanding what's really happening on the ground. Today, we're going to look at Shiba Saga. This is a recent token launch, I believe within the past month or so, that's made some headlines. There's been a lot of buzz on crypto Twitter, there's been a lot of buzz across social media, and maybe for good reason. Although this chart looks like it's going down significantly, this token at one point had over $1 billion in market cap, fully diluted valuation. I think in this case, the two are kind of similar because a lot of tokens are unlocked. We'll dive a little bit deeper and see if that's really warranted. But one thing I want to do first is try and help you to understand what that valuation really means. $1 to $2 billion valuation of a token supply is huge. And here are some other examples of the same valuations for other token supplies. Here we've got Filecoin with a $1.5 billion market cap. Internet Computer with $1.4 billion. VeChain, MakerDAO, Aptos, Arbitrum, Optimism, Near Protocol. These are massive names in the industry. And so obviously, this token caught my eye. When I went on CoinMarketCap and I saw a massive valuation for a recently launched token, my first thought is this one of the major players? Is this some new sort of like Shiba Inu or Dogecoin network that's gaining a lot of steam? Let's take a look and check it out. I'm going to be honest with you. What I saw was a little bit more disappointing than I was hoping for. The first thing I did, and the first thing that we'll do, is dive into some of the fundamentals of this project, understand what it actually is, and get an idea for the valuation and if it's appropriate. Here's the website for Shiba Saga, where meme meets utility, a new era of blockchain-powered gaming. And there are immediately some links to buy the asset. You can view the price on DEX tools. There's a couple of centralized exchanges that it's being offered on, and another link up here, buy Shia. There's some social media links, and so right off the bat, we understand that this is somewhat of a meme coin. There's some utility maybe, and it's used in blockchain-powered gaming. Okay, so it's not a layer one. It's not a ecosystem coin. It's a digital asset that is somehow powering a gaming ecosystem, maybe multiple games. And so let's scroll down and see what we got. Shiba Saga presents Shiba Crush. And so this sounds like a game, maybe Candy Crush, but reskinned, possibly rebranded with this artwork, the Shiba character. And we've got an opportunity to earn Shia tokens playing your favorite remastered games. Okay, so that gives us a better picture, right? Shiba Cart here. There's 2 games. I'm guessing there's going to be a few more, But what does this really mean? This means potentially that this team is taking well-branded games that many people are familiar with. They are rebranding them with their own Shiba artwork, as you can see here, and you can earn Shia tokens playing these games. So it's a play-to-earn-esque economy. So right off the bat, that $1.5 billion valuation at one time does not seem appropriate, not even close to what other GameFi and play-to-earn games have been doing in the past even 2 years since GameFi became big. I think Star Atlas at one point hit above $2 billion market cap for their token. But Star Atlas, as we all know, was in the beginning of the GameFi cycle and very, very hyped. There was a lot of interest behind that game. So let's see if we can see a little bit more about what's going on here. They've got NFTs. They've got staking utilities, so they encourage people to stake Shia tokens and get more rewards, so it's inherently inflationary. And they've got a token distribution here. So right off the bat, we can see 38%, which is a massive chunk of the supply dedicated to rewards. There is a private presale, so they leveraged the token for investor capital. They offered the token in exchange for money. Investors get the token, and hopefully they can make a profit from liquidating or dumping those tokens. That's a big chunk, and that's quite generous. So, it doesn't surprise me that they may have filled the fundraising round for this token. And surprisingly, they've got a docs team. So they've got Carlos. He's the king of crypto. That's not a real title. Assad is the COO, Frankie CMO, etc. And so they've got a docs team, and they've got some LinkedIn links here as well. I'm sure if we clicked on those, we can see they're real people. That's very important. But again, not what I would expect from a meme coin, especially with a fully diluted valuation or market cap that, let's be honest here, on first glance looks inflated. And we'll dive into that a little bit later. But yeah, there might be some foul play. I'm surprised that they've put their names and stamp of approval on this. So I think we've got a pretty good grasp of the fundamentals. There's a roadmap, etc. We know what this project is. We know what they're doing with the token. We have an idea of what the token's used for. We know that the token was sold to investors according to this token distribution here. And we understand what these different tranches may be used for. So now our job is to understand where does this fully diluted valuation come from? Is it valid? Was there some shady things happening on chain that could give us an idea of if it was maybe a marketing stunt or some strategy to gain a lot of attention by catapulting their token into the ranks of Aptos and Arbitrum? Let's take a look at some of the on-chain data first. All right, we're back at CoinMarketCap because this is a fantastic resource in understanding a lot of what's happening with the token. Before we dive into the on-chain data, we see a total supply here of 10 billion coins. We see a max supply of 2 billion. Immediately, that doesn't make sense. And if we go back to the token distribution, we'll see a total supply of 2 billion. Where does that 10 billion number come from? That's very strange. Now, what we'll do is go ahead and dive into the on-chain data. And what I want to show you is some beginning tools to get you started on your on-chain data analytics journey. First and foremost, when we're talking about tokens on Ethereum, which we will likely for a lot of this video series, because Ethereum is the most popular chain. It is very transparent and very easy to navigate through on-chain data. And so we have a lot of ease of use in analyzing projects on this network. We see the Ethereum wallet address here. We'll go ahead and copy that and then make our way to Etherscan, which is a fantastic resource to begin looking at on-chain data. Here we can paste the token contract address. You can also paste transaction hashes, block numbers, token names, domain names, in fact, but we'll go ahead and paste that token contract address and see what it pulls up. Immediately, You see information for the actual contract address itself, the balance, token holdings, etc. But that's not what we're looking for. We're looking for this token tracker. That is the logo, that is the ticker. So let's see what we got. Immediately, this will bring up the actual token contract address and metrics around it. We'll see a max total supply of 2 billion Shia coins. And this is a self-reported number, meaning that projects that launch a token must contact Etherscan. Typically, they'll contact CoinMarketCap, CryptoRank, all of these different database websites, and self-report different metrics on their token supply. 2 billion Shia coins, $1.5 billion market cap. Let's remember that. And we look immediately at the first red flag, just over 7,000 token holders. I'm going to put this in context for you guys. 7,000 token holders is very, very small for a project that is touting a $1.5 billion market cap. Typically, 7,000 can be associated with projects anywhere in the range of 10, 20, 30 million dollars. We also see a total transfer number of 88,000, meaning Shia tokens swapped hands between different wallets, contracts, exchanges, etc. 88,000 times. That's a very, very little number for this potential market cap. And we see that, on average, there's one transaction every minute or so. Let's dive into the holders and see what we got. Okay. The second big major red flag shouts centralization of the token supply. The first holder in rank of the percentage they hold is a smart contract. It holds nearly 2 billion tokens. That's 95% of the entire supply in one smart contract. After that, we've got Uniswap DEX V3, Uniswap DEX V2, and then we've got a centralized exchange. I think there's another one in here. If we look a little bit deeper, we'll see LBank. And then there are a few different wallet addresses. There's a bunch of wallet addresses that hold this token. They all hold a fraction of a percentage. And so already we know that the token supply is massively centralized. What we also know, which is a major red flag, if you've seen any of our tokenomics best practices content, you'll know that the token supply distribution and organization is a massive indicator of strong financial management. If we go back to this token distribution, we'll see that 38% are designated for rewards, 34% private sale, 10% team, 5% liquidity, and so on. Typically, what you want to see are tokens that are segmented into different smart contracts that resemble that exact token allocation distribution. Also, what you want to see are smart contracts that have metrics indicating those tokens are locked up according to the vesting schedule for each of those allocations. For example, if team tokens are locked up for 24 months, you can go through the code here on Etherscan and see if there's a variable designating lockup set to 24 months. This is going to give you an idea of strong financial organization. It's going to help you understand that the team is respecting best general business practices in organizing their tokens, which is a part of their finances. Let's dive into this 95% holding smart contract and see what happened here. This is where we start to paint a bit of the narrative of our picture. We understand what the team did when they minted this token, they generated the token, and then started to distribute it. Did they distribute to investors that they were supposed to? Did they provide some to liquidity? Right off the bat, they threw them all into a big lump sum smart contract with no organization. I'm hoping these tokens are locked up because that's a massive amount. And if these tokens are not locked up, that means the team has access to literally all of the tokens that they can dump at any point. This is the smart contract that holds nearly 2 billion or all of the tokens. Etherscan is filtering out the smart contract address with the token contract, meaning that we'll only see transactions of the Shia token. We see that 10 billion tokens were first sent into the smart contract 27 days ago on the 22nd of August. It then looks like one token was sent out to a wallet, followed closely, I believe it looks like less than 15 minutes later, 500 million tokens. When we see one token, this is usually what we call a test transaction. We want to make sure that we send a small number of tokens of low value to verify the transaction went through to the actual target wallet before we send the actual sum. Otherwise, if we make a mistake, we could send a lot of money to somewhere we can't get it back from. There's a test transaction here. There's also 500 million tokens going to the same wallet afterwards. This does not look like a smart contract. It can just be a wallet. What we see later is 400 million tokens being sent to 400 million tokens coming in from this same wallet 3 days later. So they sent 500 million tokens out, and then for some reason or another, they decided to change their mind 3 days later and send them back to this contract. This is not a locked smart contract. They're sending tokens in and out as they please. It looks like a whole 3 days later, they sent 8 million tokens to the null contract address for Ethereum. This is what's referred to as the burn address. Whatever tokens or anything you send to this address, you're not getting back. This is an irretrievable transaction. So they minted 10 million tokens. They were supposed to mint 10 billion. They were supposed to mint 2 billion according to their website and most likely the white paper, investor documentation, etc. So they were supposed to mint 2 billion tokens. They minted 5 times as much. And then 3 days later, they realized their mistake, or they planned and then burned 8 billion tokens to only remain the 2 billion that's left. So what kind of picture can we paint from this on-chain data and this transaction history? Either they made a mistake and minted 5 times as many tokens as they meant to, and then caught it 3 days later and then corrected the mistake, or they willingly minted 10 billion tokens and then 3 days later decided to burn 8 billion. In either way, from a company perspective, these stories show incompetence in financial management of the token supply. It shows a lot of irresponsibility and poor organization and potentially malicious behavior, because they originally were supposed to mint 2 billion tokens and they minted 10 billion instead. Whatever they loaded onto the liquidity pool to create that one-to-one value backing and determine the market cap, that all of a sudden was multiplied by 5, which may be the reason why they hit that $1.5 billion valuation. On the next video, we're going to dive a little bit deeper and look at liquidity. We're also going to take a closer look at the early insider transactions, understand what the team did with the tokens moving to this wallet, and understand how they organized them, who they sent them to, and what their motives were. Thanks for tuning in for this initial video on checking out on-chain transaction data, and we hope you like this. If this content interests you and you want to see more, be sure to slap that like button and subscribe, because we've got more coming real soon.